Wins second quarter, so the sales dropped 36%, pretty big drop from a year ago because of the weakness of the oil price, and down 31% from the first quarter. But of course the oil price has bounced back to over $40, and we think the sales will recover from the third quarter, and we still think that the sales are bottoming out for wins. We have growth just under 1% for sales in the next 12 months. The cash flow has been pretty amazing. It has declined with the sales from 37 million down to 10 roughly. This is 12-month cash flow. As of the second quarter, it's actually at 15, thanks to some gains from the investment, selling assets. With our forecast for flat sales, we still think the cash flow will be at $10 million in the next 12 months, so steady at this $10 million level. In the balance sheet, that cash flow keeps on reducing the debt, which was well over almost $150 million back in 2014. It's now down to 46 from 50, and with our forecast cash flow and no dividend, that's going to come down to 36. Back to a loss in the second quarter, not surprisingly given the lower sales, a bigger loss than last year. The cash cost ratio, of course, is higher. The average cost ratio is at 81, and it's been quite stable. So we're going to use 81% to predict the profit, which is pretty much also the same as it was in the last 12 months. So this is the valuation. We assume 0 for the investment cash flow, and it's pretty cheap, just 0.57 times sales and only 0.17 times the asset, 0.22 times the equity. We put a huge discount, 80%, but it still comes up with a higher share price, $4.20. So a very, very cheap stock. It's just a question of when the sales is seen to be starting to recover, and we think that's going to come third, fourth quarter.